producing oil is expensive, and the fields and facilities age gets more costly. Finding new resources of oil also requires huge private investments. To make their production forecasts work, the state projects that the industry spending will increase 18% over the next 2 years, which is not what we're hearing from the companies that will actually be doing the investments. BP has said that their capital budget will be the same as 2010, which is 20% less than the spending in 2009. As much as 60% of the company's spending is maintenance work, not new exploration or production. ConocoPhillips has been drilling exploration wells in Alaska every year since 1965, but they did not drill any exploration wells in 2010, and they have announced that they will not be drilling exploration wells in 2011. Conoco also gave back about 1 million acres of leases this last year. These numbers highlight serious flaws with our state government policies. Now let's take a look at some of those flawed policies one by one. This chart, starting in 1965 and ending with the state's forecast in 2020, shows oil revenues have grown to be practically the only source of state general fund revenue. Oil production began in Cook Inlet in 1967 when oil revenues were just 20% of the state's general fund revenues. The spike in 1970 occurred when Prudhoe Bay oil lease generated $900 million in bonus dollars. In 1977, the first barrel of oil came down the pipeline, and production peaked in 1988. The state forecasts that petroleum revenues will continue to fund nearly 90% of the state's budget through 2020. Oil is still the key to our economic future and will be for many years to come. If and when a natural gas pipeline to the lower 48 is built, natural gas revenues to the state will not come close to matching the decline in the oil revenues. A gas pipeline should lead to more exploration, since companies would be able to monetize the gas along with the oil, but with our current tax structure, they have little incentive to make those investments.